A very good morning to you, and welcome to the TriggerCharts pre-market rundown for Friday, October 7th, 2022. We have a few things to go over today. We noticed that, of course, we're seeing that in line with a relatively strong overall number related to the unemployment. Futures are getting harpooned a little bit today. They were down a bit more earlier. We saw the silver gold dropping, dollar driving higher. A lot of things are really moving very dramatically this morning. It would seem to me that a little bit of an overreaction to start with, and people are getting a little bit nuts in terms of probably saying, hey, we were positioned this way, expecting that to happen, and it didn't happen. Hey, before we go on, I want to mention that the discussion this morning is for educational purposes only, and it is not any indication of recommendation at all. Please consider this, again, for education. Use your best judgment, because investing does involve a substantial amount of risk. So with that in mind, I think it's important to understand that right now we are in a situation where markets are generally pissed off, right? I mean, I think that's a good way to put it. There's no good things happening right now. We saw a wonderful rebound bounce that happened this week, and we'll talk about that a little bit. Off of the bottoms here. And we're going to be looking at a couple different things. We'll look at TradeStation today. We're going to, again, focus in on the core fundamentals of market profile, the algorithms that we're bringing you through our new distribution program and partnership. And then show you things like we'd also show you, what it looks like on TradingView, because as I mentioned, it's, all over the place. You can get it on any of these. We'll talk about that in a second and answer any questions you have. And by the way, if you have any questions, just go here. All of the indicators that we talk about are available, the concepts, the theories, the usage available over on TriggerCharts.com. Anything you click will take you to the opportunity to download, install, and join in on all the different features that are available with the seven new indicators, or 7 indicators, not new, but 7 indicators that are available for you right now. I think really, though, one of the things that I think is extremely important in our sessions is to understand the concept of high confidence trades. The idea that we want to find those areas of interest, the important aspects of where we are in terms of the price action, to understand if there is a place that we can say, hey, I feel a really good and high confidence due to, and we'll list the reasons, that we can either be in this position, we shouldn't be in this position, or we should be short the position. So short means out also. If you're long, you're short, you're out. In kind of waiting, in the wait and see mode, you haven't had a position at all in it, and now it's a wait and see position, or you're looking to move into the long side to buy shares in this name, whatever it is. So what's interesting is that oftentimes you also see what's called a reflective trade that happens because there is a lot of behavioral finance emotions that go behind the idea of trading. And remember something, who's doing the trading? Well, it's a combination of people. One, we can say the algorithms are trading. I don't think there's any disagreement with anybody that we do see algorithms doing a substantial amount of the movement throughout the mornings and afternoons of weekdays, but also we do have the individuals, whether they're retail traders or they are institutions. And, there are a good amount of the algorithms that are based on behavioral finance. In other words, what they're doing is looking for what they believe would be the inflection points, the emotional touch points that would make people move in or out, the scare points, the fear factors, the opportunities for fear of missing out or for opportunities to get in. We're looking at right now on the right side of the screen, of course, is the Qs, the NASDAQ 100. That's been very important. 274.67 in the pre-market, down about 1.83%, 4% on the jobs number. And if you haven't watched, the jobs number that came in today was, I would say, a little bit hot in terms of a couple of components. The good news was that we didn't see any extreme change at all, not at all, in the wage gains. That would be a big issue for inflation. But we did see the jobs employment situation, the unemployment rate tick down to 3.5 from 3.7%. That's a bit of an alarming situation considering all the things that the Fed has done to try to beat the crap out of this economy, right? To try to totally derail, push into a recession, slow down, deliquefy, all the things that are going on. You have to wonder, what's going on and why is employment so strong still? Obviously coming into a seasonally interesting time where employment usually is strong into the holidays for retail, especially for some lodging as well, services. But what's really interesting, and if you really think about it, is that the tools that we're using, and I don't want to get into a whole discussion about this, but I really want you just to think about this for a second as you're doing your trading. The tools that are being used right now to try to change things, to try to uninflate from an inflation, to really slow down the economy, and from the aspect of what indicators like the unemployment rate, inflation rate, and how they're calculated and what goes into them, and all the traditional economics that we've had over the last, let's just say, dozen years. We could go back further, but just let's stick on that for a second. I don't want to say it's different, but maybe there is a difference in what is going on with regard to um, the situation related to the reopening, the pandemic, the wartime situation we find ourselves in now, which is a little bit more predictable. But all the things that are going on around the world with regard to the consumption stoppage and start due to the pandemic, and how the economy, we're only 2 years out from where the whole thing was shut down, right? That's not a long time to not only feel the impact and effects, but to reverberate what the ramifications were from all of the excess stimulus. And on top of that, of course, not to mention all the things that went on with regard to reopening. So, and trying to shut it down. So the theme that we have to talk about this week is, it's all about rates. It's about those rates, that was that great song that was out some years ago. But one of the things that's really interesting and what you have to watch and recognize is what is going on there in the financial media. And I bring this up because you really need to understand, when we're talking about technical analysis, what is happening with regard to the psychology of people. We are being just plastered, anybody that watches CNBC, with, it's become the Fed channel. It's absolutely an awful experience to watch, because every conversation goes to, what do you think the Fed will do? In other words, they could be talking about cotton balls, and somehow a host will twist that around to talking about what the Fed will do. The problem is, it is in maybe it's almost like an arm of the Fed. In a weird and perverse way, CNBC has become a strange whisperer for the Fed. Maybe they want to do that. Maybe they feel cool about that. But the dollar strength that we're seeing due to the potential for an increase in rates, and the strength that we're seeing in the flight to safety, is really causing trouble for things like silver, gold. Gold down in the top here. We could look. I'll bring out a little tool here. Down a bit. And we see the futures obviously getting cracked again a bit here, holding a little bit above the line. We said 274. Right now I drew a line about 274 is that line in the sand right now that we can kind of go back to seeing. Drop below that, we may have a chance to start thinking about a further downside. People are running scared, let's be honest, and a lot of things that are going on right now in the world is an issue. And what does it all relate to? It relates to this word right here. And this is what I brought up earlier. And this is the lesson I really want to go over today. Not always do we talk about in this discussion, okay, this stock, that stock, which I have a good amount of names that we could talk about. There's no question about that. But what I really want to talk about is also, some of the things to make sure that you don't get caught on the wrong side of the trade, because you know what, we can look at all this all day long, but the way that things are moving in terms of volatility, the viciousness of what we're seeing right now is pretty intense, isn't it? And you can get yourself really caught in a situation where you make some really bad decisions, to be honest with you, because maybe you're following the rules, but maybe you're not. You know what I'm talking about, right? And what's happening is that when we see that there is what is going on right now, it's important to have multiple confirmations. Let me just bring that back up. There we go. Multiple confirmations in the view when you're looking at things. So one thing we look at, for example, is our basic levels when you look at the boxes, right? And again, I'm going to keep on some of our we'll call legacy clients and customers. So let me tell you that, this is altimeter, now called boxes. And I got a little cheat sheet over here. Here's it right here. Let's talk about that. So, so you have let's just start at the top, I guess. So you have the market map, which is the radar, which we could show you in a second. You have the boxes, which was altimeter. You have Vega. You'll get used to these really quickly. Bottom line is, you know what it looks like, right? You know, the bottom line is, you know what this all looks like. You know, we want to look at maybe the old radar, if you will, with the Vega and with which was autopilot, and with what I say? I said Vega, autopilot. We have the old radar, which is market map, and we have, of course, the altimeter, which is boxes. You know, you can look at it all sorts of ways, turn them on and off whenever you want. I'm just focusing in right now on very simplistic. Hey, by the way, above the line, do not be short. Below, so above the red line, do not be short. Below the green line, do not be long. Those are two places that you could really hold on to so that you don't get it wrong. That's the bottom line there, okay? Write that down, commit that to memory, really important. I'll say it again. Above the red line, do not be short. Below the green line, do not be long. That doesn't mean you have to take the short trade. That doesn't mean you have to take the long trade. But just be careful, because the probability and odds are that once you break above a key resistance area, that's a problem for the opposite side of the trade. So I'm trying to keep you out of the wrong side of the trade so you could just be on the right side. Now, let me tell you something else. I want you to listen to very carefully to what I'm going to say here. Very, very carefully to this matter. You are not going to move the markets. The markets will move you. I say that seriously. You're going to say, of course. Well, of course. How many times have you entered in a trade? You're like, hey, you know what? I'm going to push more because they're wrong. They're wrong. They're wrong. I'm right. They're wrong. Do not do that. Wait for the right times. Wait for the right times. Find those key technical zones. Follow along with the crowd. You hate this, you hate this, you hate this, and you didn't say, I wasn't going to invest in that during that. Oh, no, 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 no. Meanwhile, you missed a huge rally right there. Then you come down and you say, oh, I knew it was going to come down. Well, you could have had both this and this. Take them both. Be agnostic to the theme of who cares. Realize that, you know, gold and silver get hit with the dollar. The markets are coming up a little bit from where they were, but again, we have a very volatile morning. We were down about 320 on the Dow before, so about 100 points up. You're going to see that moving back and forth. We're seeing silver. I'm just dragging this over to show you. This silver right now, you know, really smacked down on the number, and then it kind of really couldn't figure out what to do. Now it's starting to come back up. You see that in the gold numbers up top here too. And so the dollar is probably doing this thing. Let's see what's happening to the dollar here. Let's go. See, look, euro is starting to come up from the bottom. The pound is starting to come up from the bottom. The yen spiked higher, coming down. So that's in line with the potential for a turnaround. I would suspect, you always ask me this, or I always tell you that, you know, there's a very good possibility that they'll be playing a bounce here today. Very good possibility that people are going to be thinking, you know what, we washed it out. We knew this was coming. You know, it's bad. It's not that bad. We did hit the number that we thought we'd hit in terms of new payrolls on. The unemployment rate could be some other issue regarding the labor participation rate. But you know what? The inflation number inside the report was not that terrible. And the Fed, you know, they've raised a lot. And nothing changes what we thought was going to be. It doesn't change anything. The only thing it changes, I'll tell you one thing that this changes. Anybody know? Anybody know what this concept changes? It changes this. Well, let's bring this back here. Here. It changes this huge jump, this 6% jump in 2 days. That maybe that was a little bit much, but we leveled off yesterday, didn't move up. We ended up in the middle. Maybe we'll come back down to test it somewhere in this range. But really, this range right here, this general range, is the level of, oh, it's bad. We know the Fed is going to continue increasing. We believe 75 basis points will be the rise. But wait, oh, we saw a couple of bad numbers. So they moved it up. So now where are we moving it? What do we got? 275.29, right? 276, my number there that I'm looking at for a level that probably will be a support level. I would suspect that we're going to see a lot of movement today. A lot of movement. On a Friday, etc. People are freaking out. Don't forget, before the number, everybody is positioning themselves. That's why you see the move so dramatically on the number itself. Point is, Key technical zones. Wait for the right times. Multiple confirmations. What do I mean by multiple confirmations? Well, when I'm talking about things like, for example, let's put on, these are all the same. So did I do that? No? Oh, there's monthly. That's a problem. Let's go to daily. There we go. That's what I wanted. Look at things like, for example, where is that point of control? Where's that yellow line inside of the market profile? When you're looking at this, okay? Where is the levels that we want to look at from a standpoint of where we have seen before? Multiple confirmations. Go back in time and find where those levels are. So we had this 274, 275 right here. There's a 275 I was talking about. Where are we now? 275.41, 275.84. That's give or take, it's 25 cents or so is the range. 276, 275 and change. Every time I drop it seems to go higher. I don't know why I'm not dropping. There we go. 275.72. That's where I want to drop before. But we can see that there is some precedent of this going back just a little bit. We see that it's the bottom of the range. It's a very high volume. The yellow inside of the market map is in the market profile here that we have. This big bulky colored portion is all about the idea that we are finding a significant amount of volume there. And we find that volume, it's important to understand when we look at this market map, this overall, this market map that is giving us a granular view of things. So we can say, okay, we have that level, we have that level, we have that level. That becomes multiple points that I can say, I would like to try to play a bounce play from there, let's say. Or, and if it fails, by the way, I know my levels. And if it fails, how far is it going to go? I'm going to let it go down to 274.27. The exact number is 274.21. Just hover over it. 274.21. Okay, well, that is going to be the level that I'm going to say I'm out. And then we play the other side. Because again, what do we know? Do not be short. Do not be long when it's below the line. Now, you want to play this inside level? Okay, have at it. Very tough. We like to play the breakouts, right? Above 282, we wait patiently. We sit there like a hyena at the bottom of the tree, waiting for that panther, that jaguar, to drop a piece of meat and say, "Hey, you know what? That's safe to go after right now." We don't want to go after it when it's sitting there in territory that is very uncontrollable to us, right? We don't want to go after where that jaguar is in the tree. We just don't want to do it. That leopard, whatever you want to call it. I mean, I'm thinking of my trips to Africa. You have a leopard in the tree. You don't want the hyena does not want to go after it in its ground and where it's get mauled. You want to wait for it's easier to pick it up where you think that there's high confidence that you're going to be able to profit and benefit from that. That's the whole ticket here. So just think about that when we're talking about all the different names we're going to go over today. All right, what else? What to watch? Ooh, the pot stocks. Did you see that? Biden did a little number yesterday. Actually, they're down a little bit today. This is not it. It didn't look right. That looks like it. That definitely looks like it. Up today, 5%. I knew it was going to be up this morning, but you're seeing a lot of stocks inside this pot ETF. There's a couple of them out there. MSOS, MJ didn't do as well, but pretty good, pretty significant. Let's go back to MSOS. Not typing well today. There we go. This is the Advisor Shares Pure U.S. Cannabis ETF. I mean, huge move, like 35% yesterday off of a $9 base, just going down. But look what's interesting about this. And let's take this off so we can get a clean look at this. And again, just look, we came up to this level, just couldn't get past these core points here, and there's multiple areas. Again, when I say multiple areas, remember something, within a range. That was a tough area for it to breach. A little bit below, a little bit above. It doesn't have to be exactly on. It can be a couple of cents off, but still, let's draw it exactly on to make everybody happy there. That range was very tough, difficult. You got through it for a little while there. Tried to push up. Going to push up a little bit today, 1278. Really need to clear this level. Right now it's pre-market, but 1245, and then you have up to about 1287, 1290. You could definitely move up to these levels here, about 1355. Now, when we go backwards and look a little bit further back, I mean, there's a long ride down, 24 down to 9. But you have some range here, and I got to tell you something. There's not a lot blocking this. I'd love to see it over the 1373. I mean, then you have this to contend with. This is the big issue. I'm going to move this box that I drew here. this rectangle and try to grab it best I can. There we go. This area right here is going to be the tough area, as I see it. Right here. Oh, I'm having a hard time drawing today. All right, whatever. Let's try this side. There we go. That's going to be a tough area to get through. So when you're looking at where this is going to go, I would say the 14 is really the top end that should be watched very carefully. I think that's going to be an issue to really try to get through. Fact of the matter is that when we look at this, there's a lot of shorts that went into this. There's a lot of opportunity, but there's also the fact that Biden has to make a significant amount of change in his overall he has to go and I think Health and Human Services has to go out and a few other places to figure out if they want to decriminalize. This was not on just Joe Biden yesterday, President Biden, saying that he's going to release I think it's 6,700 or so prisoners that were in jail due to federal offenses related to some kind of marijuana, something or other. This was really on the commentary that he's looking into the federal why is this such a drug that's with other drugs that are, on the scale of felonies? And he's questioning that. And if he does, in fact, decriminalize that, interesting situation going on there. So I thought that was an interesting play right there of what went on yesterday. This was great trade to, for non-signals. Great trade to look for non-signals. Watch for the short covering. So there's a lot of things happening here. So there's a big short covering going on here. This was an interesting one I think you want to look at. Things like Caterpillar, big move over the last few days, got right up to the point. You could have drawn a line and say, okay, that's all it's going. Thank you very much. SPY got right up to its line also. Again, let's move this right there. Again, a few cents above or below, that's what happens. Things accentuate in these kinds of market conditions. Remember, when volatility is up, we're going to see extensions beyond. This was a beautiful, I mean, you don't always get it like this, right? Right here. See this right here? You don't always get it right up to the top and then whoop, shoves down. Or, one day, that's it. It couldn't hold it and falls down. That is not always how it works. Sometimes you get it right around a range and it's like, okay, that's enough. We got a big gap in this area right here. So 370 is kind of that area on the top end that you would think there would be some support right there. Again, it's just not looking great. These charts don't look great. That's why everybody's been leaning on the short side of things. Somebody's asking about USO, which is a bit of a broken position. If you look back on this thing, it's really ugly. Let's go weekly. Let me go back and forth here. Used to be like $900 a share. Now it's 72. So there's all these reverse splits that went on here. Really messed this up. But okay, let's forget about that. Let's just forget about that. Let's go to the fact that we are looking at this. But let's look at crude for a second, which is at CL as the generic crude contract. Looks kind of the same. Not a lot of differences, except for the fact that it hasn't failed as dramatically. So we are seeing a bit of a move up here. Crude probably has till about 90 or so up today, which is really interesting in the face of a higher dollar, which is hurting gold, is hurting silver, hurting the markets. So that's kind of happening. Let's see what XLE, which is a good play on this too. XLE is up, dropped down earlier on the news, but XLE, that's a better trade in my opinion. The leverage you're going to get in an XLE or some of the stocks that are in the universe of oil exploration and refining and services and things of that nature. But the oil services and select energy ETF is an interesting way to leverage. You went from 69 to 82 recently. 69 to 82. That's pretty substantial. And I think if you want to take out a pencil, get ready. Get ready for something. If I could find it. Just a moment. I don't know if I'm going to find it. Nope. Nope. Okay, well, that's that. Don't have it. Nope, I don't have it. It's going to give you a list of some of the stocks in here. You can look at the stocks that are in here and figure out what's going on here. But USO is interesting. When somebody says KRI, are you saying KRI as in the stock, which I don't know the symbol of that, or are you saying KRI like KRI? KRI is at a neutral point right now. A neutral. This still has to be worked out. I think we need to get somehow. Now, don't ask me exactly how, but we need to work some of this off that we had here. We need to come up here. This is what we need to do: is get into this range over here, and that will be working off some of this. This is a lot of work to the downside right here in terms of oversold all of this. And kind of when you think about this, I like to see long-term averages at the zero line, right? So we're only zero now. So technically, really, to bring this down, I know this is up over here, but I'm taking some of that out. We need to see some up here. Now, is that going to happen today? No, it's not, obviously. In fact, today you're probably going to skip back a little bit here. But this was a nice move off the, I mean, that bounce, you know, it took a number of days to get there, and then it was more. So sometimes what happens is when you see these oversold conditions, they'll just, you know, move right back up, you know, like that. Sometimes what happens is they keep on going, you get this really wonk, but then what happens is you get a bigger move. That's what happened here. You got this big move that happened because you were just so overdone to the downside by every metric you could imagine, right? Let's see here. What did I want to do? And some of the stocks to look at. Yep. I looked at that. Okay, look at that. You know, some interesting things here. Here's one. Petrobras, if you want to really Petrobras, that's not it. PBR. Yeah, there you go. Big move, 12 to 14. I don't know about you, but that's a nice move in my book. Fact of the matter is that this is tied to oil, but it's very all over the place. Election issues. It's going to be very, very significant when we do see it finally break out. I had one more that I want to talk to you about. Tesla. You know, let's look at Tesla for a second. That's a good one because Tesla now is embroiled in all sorts of problems with regard to Twitter. You know, they're buying Twitter, they're not buying Twitter. They're buying Twitter, they're not buying Twitter. Again, this was split adjusted for a long time ago. Where are we right now? Well, there's no question, and we're in a downtrend. We're in a bias on the short side. We're not above any lines. No new lines all the way up here, all the way up top here, depending on how you have your settings set. But this is how I have my set. What we're seeing, where's the bottom? Let me find that. Let me kind of look at this a second. Yeah. I mean, you have some support here, and we can go into some price only action back to here, but that was a bad trade, I think, on that. I would go right here. Can we talk about indicators migrated to candid, which is not as good as before from the indication or knowledge-wise, throw a light? What does that mean? I don't know what that means. What do you mean they're not as good? Same algorithm, same. Venkata, do me a favor, send me an email so we can go over this and understand what you're talking about. I mean, that'd be helpful. Send to info@triggercharts.com, okay? Because so I can refine that and you can put a little more words into it and understand what you're talking about. We have a meeting today, by the way, at 10 o'clock, right after this, with some of the peeps over at Candid, and we're gonna talk to them about a couple of things and try to do some discussion about another potential upgrade. So anyway, we're going to end it right there. Thank you so much for joining in today, as always. We will, yeah, you should be able to get the indicators on TradingView. I'll talk to them today. Oh, really? Yeah, that's weird. They told me it's available. I mean, I go back and forth. I'm more of a TradeStation guy myself. I mean, I have it on TradingView, obviously, here. But I will do so. I'll find that very shortly. All right. Thanks so much, everybody. And we'll talk to you again next week.